Today, of course, is Thursday, October 19th, 2017, and our regularly scheduled webinar. So I do want to wish each and every one of you here today to the webinar, and hope everybody is doing well today. Okay, we're going to start right in. We're going to jump into the monthly look as we've been covering recently. And again, I've been doing this primarily because of the fact that we've been trading above the upper Bollinger Bands. So we're at extreme levels here in basically all major markets. As you can see here, the monthly is, on the monthly chart for the S&P, the upper band is 2438. We are about 110 points above that level. So we're kind of going into hyper growth levels. For the Dow, that level is 21,207. Okay, so we're above 23,000 now, so we're about 2,000 points above the upper extreme band on the monthly chart. And then for the composite, the upper band is 6103. Roughly trading around 6,600, so about 500 points above the upper band for the composite. Now, my thought process at this point is very simple. I think that for this market to really turn into a bear market, we're going to have to see a close underneath the upper band, okay? And I don't believe we see a bear market start until that happens, okay? Until then, you know, these markets continue to trade above the upper bands. Okay, for gold, upper band is 2034. The mid band is 800 roughly. So at this point, we're in a situation where, one of two things are going to happen. We're going to break out, probably run up to the upper band, or break down and maybe move down to the lower band. Having said that, we do have support at the 1020 level, which is the 200 EMA. And then for oil, okay, this has been the key here as of late. I mean, we've been looking for a retest of the mid band. The mid band is 55.57. Yesterday it closed at 52. So very simply, we want to see if the mid band repels oil. Apple, same thing, 145 upper band, trading about 15 bucks above that level. And then here's the 10-year treasury rate, treasury yield. So you can see that the treasury yield is in a defined downtrend. It's been a long-term downtrend for quite a while now. So I think if rates do go up, excuse me, I don't see the rates going up more than 4%, which is about the mid band. Okay, now let's take a look at the intraday charts. Okay. All right, here we are, S&P 500. Oh, let's go back here. All right. Our active objective at this point is to the 2578 line. All right, that's the crucial line we're looking at in terms of the next upside level. 2558.60 is the downside level to 2539. All right, so we've managed to trade above that. Actually, yesterday we actually closed above it, as you can see. So at this point, and we actually, by the way, the day before we closed above that, Monday. So to me, the active objective should be to 2578. Now, what would invalidate that? Well, if we had two closes under 2558, that would invalidate the bullish scenario. And we'll look at today's market because I know we pulled back a little bit. But again, the key level is going to be that 2558. Okay. Here's the 30-minute chart. Now, I only drew in the short-term upside confirming line, which is 2539.10. You can see that the 30 has been in a strong uptrend as well. So we have both the 30 and the 60 in bullish formations. And then here's the VIX, okay? The VIX has been in a downtrend on the 60. Now, we've been kind of bouncing around that 1016 level. Okay, yesterday we actually closed back under it. So we would still, and by the way, we did have, I believe we had one close above it on Monday. Closed back underneath it yesterday. So we would still need two closes above 1016 to move up to 1250. Here's the 30-minute chart. The 30-minute had crossed into an uptrend. So I expect the VIX to be somewhat volatile here until they both come back in line. And then here's the QQQ. You can see the 60-minute chart. 60-minute chart has been firmly in an uptrend. 143.75 was the major support line on the downside. The objective is still up to 150. Now, 148.44 is the downside confirming line, okay? And we've managed to stay above it, right? So for the Qs to drop, we would need two closes under 148.44, and quite frankly, that hasn't happened yet. And then here's the 30-minute chart. You can see the 30 had just crossed into an uptrend, all right, back at the beginning of October. And as you can see from the EMA formations here, they're spreading. So it's actually getting stronger. And then here's the TLT. TLT crossed into a downtrend on the 26th. Okay, it came back up, actually got above the 125.78 line. And yesterday it popped down to right at the 125 line. Now the question is, will that level hold? If it doesn't, then it'll drop further. Now, shorter term, the 30-minute chart had crossed into an uptrend. Okay, so that just crossed up on the 16th. And as you can see from yesterday's price action, it gapped down, but it primarily held at the major 125 line. And then here's the GDX. GDX crossed into a downtrend on the 28th. Okay, the lines are very narrow at this point. I mean, on the upside, we have 24.22. It's been trading for the last 2 days right under the 23.44 line. To move lower, it would need two closes under that 23.25. So that really hasn't happened yet, you know. If it does break under that, it'll drop to that 22.66 line. And then here's the XLE. You know, the major 68.75 line is a line of resistance, okay? And you can see here for the last couple of weeks, it's been repelling the price action. And I think I brought up the fact that, to me, I don't see the XLE moving up until it closes above the 68.75 line. We have had a couple of closes under 68.36, so it's possible we'll drop to 67.19. And then here's the 30-minute chart. The 30-minute had crossed into a downtrend. So again, we'll probably get some volatile action until it finds support. And if I go back to the 60 here, I would not expect the XLE to drop further than the 65, 63 level, okay, even if it does correct. And I think at that point, there's probably a very good opportunity to get long any oil stocks. Back to the 30, and then here's Apple. Okay, from this chart, now again, it's not vividly clear because of the resistance levels are drawn in here. But on the 60 here, the Apple is starting to get into a formation where it's crossing into an uptrend. Okay, the 200 EMA has already curled up and is heading up. The 253 is kind of flattened out. The 30 had already crossed up back on the 10th. All right, and you can see that that's spread out, and you know we're getting that really nice, strong. I'll point it out here. We're getting that really nice, strong. That's a terrible color. strong uptrend, vis-a-vis the fact that the EMAs are starting to actually separate. So we've got the crossover here on the 10th. We actually bounced off the upper band here the other day. Now, here's a little setup I want to just show. If we scale down to the 10-minute chart, okay, we see over here that the 30 had crossed up on the 10th, okay? The 10 was in an uptrend, okay? It was already in an uptrend. And we know that because the 200 here is above the 253. So when you see that formation, what you can do is scale down, take a look at the 10, say, okay, that's in an uptrend. You know, now it's time to buy oversold condition off the 10. And over here, the next day, late in the day, was the first minor oversold condition. Again, late in the day on the 12th, it was oversold. So if you look at this, say you got in here, you got in again here, you know, it bounced up and made about a $3 run in 2 days, just off that formation. But this is a really nice setup to be aware of, okay? 30-minute crosses into an uptrend, scale down to the 10. If the 10's in an uptrend, just buy the oversold condition off the 10. Now, what would you do if the 10 wasn't in an uptrend? Well, you'd expect probably a little more consolidation before it would start to head back up. And usually you're better off waiting for the 10 to cross up before you look to enter the market. Okay, any questions? And then I'm going to just show a few earnings trades because we are getting back into earnings season. And, you know, I continue to show these because one of the things about earnings that I particularly like here, okay, is the fact that volatility creates opportunity, all right? And it's a question of reading it. And again, these are very short-term trades. These aren't trades I'm looking for major, you know, if you will, trend changes. You know, I'm looking for short-term moves based upon somewhat predictable patterns. And I'll show you what I mean in a few minutes here. But here's Goldman. You can see where the earnings was. We had a tremendously bearish candle. You know, the formation we want to be cognizant of here is that the Chaikin money flow on the daily was positive, even though Goldman sold off the earnings. Here's a 30-minute chart. 30-minute was in an uptrend. Here's the earnings. Open, just completely collapsed, pretty much sold off the rest of the day. And then the next day, late in the day, we had the reversal and a gap back up the next day. But now we scale down to a 10-minute, okay? And we see a couple of interesting things here. First is the fact that the 10 was in a downtrend, okay? So we see the first three bars just kind of collapsing on the Goldman. This is after the earnings, okay? And then it came back up, had the retest right here of the mid-band. And that, to me, was a great entry, all right? Because, in essence, you're using the mid-band as a stop. And if you look at it, the pivot high was 241.57. Well, from there until the low of the day, it went down to 235. That's a $6 move the balance of the day, and pretty much straight down. Now, what makes these kind of trades very intriguing is the fact that, you know, a stock like Goldman, which does have weekly options, you can utilize a weekly option, okay, to trade these. So you don't need, you know, the price expectation is we're not looking for, you know, a multi-day move. We're looking for just a move of a day or two, and we're looking to bounce. Now, granted, the 17th was a Tuesday. So if you're using the options that expire that Friday, there's still going to be some cost involved, okay? If this happened on a Thursday or a Friday, obviously the cost of the options are significantly reduced. Another way to look at it is you have much better leverage. But if you look at this was a $6 move right into the close, and then quite frankly, it was tremendously oversold. It was basically under the lower band, okay, and then lo and behold, it reverses and gaps up, actually took out the mid band, and then once that happened, it actually continued higher. And that's usually what you see happen here. That mid band is kind of a line of resistance, okay. Or it also becomes kind of a price objective area. I mean, so if you look at this back over here on Goldman, trend was down, stalled right at the mid band, continued down, took out the lower band, continued up, gapped up above the mid band on the earnings, and guess what? Went back down and took out the lower band again. Right. Now that it's taken out the mid band, you'd be looking for that mid band to hold the support. And we'll look at that after I close down the PowerPoint. See if that's true or not for today. But this was kind of an interesting earnings move. This is Cree, and they reported the other day as well, same day as Goldman. I mean, you can see up top tremendously positive Chaikin money flow, okay? Lot of money flowing into this stock, and you can see it had kind of just traded in a very, very narrow range into the earnings. Quite frankly, I wouldn't have gone long here before the earnings, okay? Only because it was up against the upper band. But nonetheless, this thing moved 16%, which to me was kind of mind-boggling. But here's the thing. If you scale down to the 60, you can see the same formation. The money flow had been just tremendously positive, prior to the earnings. Trade in a really narrow range for a number of days before earnings. We scaled down to a 30-minute chart, 30 in an uptrend, tremendously positive money flow. And, lo and behold, the stock gaps up and just runs and actually took out the upper band. But what's interesting, if you ever think about trading before earnings and you scale down and look at kind of the dynamics of these shorter term time frames, oftentimes they can put you on the correct side of the move. Now, it's not 100% true that the technicals always line up with what ultimately happens off of earnings, okay? And that's what makes it, to me, very difficult to try to trade before earnings. The question is, where, would you be willing to risk some money and put that type of trade on, okay? And, what I'm just pointing out here is that when you look at the formation of these shorter term time frames, to me, the logic would tell you that you're better off trading long than short. Because both short-term time frames were in uptrends, both of them had very strong money flow. The daily had very strong money flow. So it's almost like you had triple confirmation that, this thing is probably going to pop. And that's exactly what it did. These kind of trades I would not risk a whole heck of a lot of money on. But, to me, at times they are worth the risk. Okay, let me see. That's what I wanted to cover in today's webinar. And what I'm going to do is, just give me a minute here. Okay, now, see if I can do this. Okay, I'll put the handouts in here. Because I want everybody to have those price levels. Especially the monthlies. I'm obviously very concerned about the monthlies. All right, let's take a look here. Let's take a look at Goldman. All right. Now, interesting. Here's the 30-minute chart. Let's take a look at the 10-minute chart. Here's the 10-minute chart. Now, a couple of scenarios here with Goldman. First off, the fact that it took out the lower band tells me that there's probably a high probability that at some point it's going to retest the lower band. That's the usual pattern. And what's kind of interesting here is it gapped down, okay, and held, and now it's starting to move back up. When we look at the 30, okay, look at it. It's now closing above the mid-band here. So if this bar closes above that mid-band, I would expect Goldman to continue to move up. Let's take a look at the S&P. All right. Now, we know the downside level is 25.58. Okay. Look at it. Today it gapped down, dropped to 25.48, and right now it's back to roughly 25.48. All right. It was at 25.58. Let's take a look here. Yeah, 25.58.60. All right. So we know that that's the key level. And most likely the market's retesting that price level. We're within $2 of it right now. Now the question is this: will the S&P close under that today, which sets up a scenario where today is the first close underneath that downside level, or will it recoup that level today? If it recoups it, then the bullish sentiment is still in the market. Take a look at the VIX. Wow, the VIX got as high as 1110 today. Now, if we look at the VIX, all right, the key price point is this 1016. Last trade's at 1048, so it's about 32 cents above it. Now, where this becomes critical is, and again, we could have one close above the 1016 or one close under the 25.58 level. The key would be what would happen tomorrow then, and that would tell us if the market's going to head up or head down. Again, I'm usually looking for two closes above or below these confirming levels to help us indicate where the market should go. Interesting. Because we're right there. And usually, by the way, when a level gets broken like that, a lot of times it comes back to retest it in the opposite direction, which is kind of what's happening right now with the S&P. All right. So we drop all the way to 25.48. All right. And let me just take a look here. Which 25.48.85 is the upside level, right? It dropped to 25.47.92. So if you're trading short term, just knowing these price levels, okay, the logic dictated that when it got down about 25.48, that most likely that market's going to reverse, and that's what it did. And again, there's other price confirmation. The fact that 10's in an uptrend. If we look at the 30, the 30's still well in an uptrend, okay? Boy, it didn't even come down at a 200 EMA. But again, this shows you how, if the markets are trending bullish, you really want to just stay long. Now, I'm not saying you can't trade, up here or here. But to me, that's a riskier proposition. And quite frankly, say you bought puts yesterday when it failed to get back up through the upper band. All right. Well, on the gap this morning, you'd probably be looking to cover those, with an expectation that most likely the 25.48 level would most likely hold. And again, it's interesting because as we're talking, it's now coming back to retest the 25.58 level. It'll be interesting to see if it gets through it today before the close. Now, let's see what else reported. Oh, we had UAL reported. Let's see what that did. Whoa. All right, UAL United's down about 12 points. Oh, jeez. I apologize. I have an 800 number calling me on my cell, which is always nice. All right, so United Airlines reported, and they're cratering. Now let's take a look at the daily. Okay. Now this is interesting. Here's a scenario. We have the daily in a downtrend. Okay. We had negative money flow going into earnings. And again, if you looked at this scenario, just looking at those two factors, you'd say, well, you know what? Logically, the best setup would be short if you were trading before earnings. Here's the 60. The 60 had primarily, not really tremendously bearish money flow. However, it was bearish yesterday into the close. But more importantly, the daily was negative and the money flow on the daily was negative. So again, I don't know. I didn't price this out before earnings to see what these options look like, but I'm sure UAL does have weeklies, and it's a nice $7-8 drop here so far today. Let's see what it looks like on the 10. It's probably under the lower band now. Yeah, well below the lower band. Look at that. So to me, okay, if you had bought puts yesterday going into earnings, I'd be looking for a price reversal here or a consolidation to close the position, book the profit and go. But it's interesting because if you follow our rules, okay, here's your first bar. All right. Let me erase that. And the second bar closed under the low. So if you had watched this gap move, okay, intraday, forget about trading it yesterday. Let me just put up less data here so it looks a little clearer. Okay. We've got the second bar here closing underneath the low of the first bar, which tells you that price is probably going to continue down, even though it's under the lower band. And what's kind of interesting about this is if you look here, we had the little doji with the bearish engulfment, and that was about $65. And since that entry, it's down about $5. Now, I can tell you on a Friday, this would have been a really wonderful trade, because you had very, very high leverage because of limited time premium. So this would have been a really, really nice trade on a Friday. Well, let's take a look here. Now that I'm thinking about it, okay, this bar closed at 64. This is what makes these earnings moves to me so intriguing, because as I've said on many occasions, there's only a couple of scenarios and possibilities that these stocks are going to move. And usually that first day, that second bar close is a very strong indicator that the stock is going to continue in that direction. All right, so we look at this right here, it was about 64. So let's go down to the puts here. I'm intrigued to see what kind of leverage you got on a Thursday. And wow, they got 50-cent increment options too. Excuse me. All right, so look at this. It opened at 21 cents. The low for the day was 11. Now, if you went in here on that little pullback, this was about 11:10 Eastern. There's the price, 51 cents. So you still could have got in here at 51 cents. And right now, wow, they're showing a bid ask of 252 to 355, which to me is BS, because right now the in the money value of that option puts it about 4.25. So that move since 11 is about an 8-bagger, where you paid, say, 50 cents roughly, and it's probably now it's probably about 4.25. And if you were really gambling, and just went out of the gate and bought the 54 this morning, it would open right at 21 cents. Jeez. So that's tremendous leverage. And again, this is a Thursday. So if this move happened on a Friday, that option might have been 30 cents on the pullback. And right now it's over $4. But what's interesting about it is, this is the pattern. All we're doing is looking at the bearish first bar. We see the second bar closed underneath the low. And guess what? It just continued to collapse. URI reported too. All right, now here's URI. They reported, okay, again, they had a bearish first bar. But notice what happened here. Second bar closed within the body. Third bar did. Fourth bar. Fifth bar. Now this bar, the low there is 141.58. And this is let's see here. That's 147.60. All right, so it closed just underneath it. But look at how long it took to do that. Trend is still bullish, so I'd be very disinclined to trade this to the short side at this point. You usually want to see that second bar close under it. And then use the shorter term chart, like the 10, to enter on a little pullback. Let's see, DGX reported. This is what I love about these trades. Now, this is kind of a wild trade, right? Look at this. It opened, dropped. I guarantee you the market makers here were cleaning out all these stops underneath there. And then it completely reversed and headed right back up. Trend is up, positive money flow. Let me see something here. And if I go to the 10-minute, there's the 10. And look where it stopped. It stopped right at the bottom band. And it just completely exploded, took out the upper band. So to me, momentum is to the upside here. I wouldn't look to enter this until the 30 got oversold, which would put it down here. Look at the Williams, see when the Williams gets oversold, and then look to enter this. Interesting, but we are getting back into the earnings. So that's what I want everybody. If you can and you have the opportunity to do it, to consider some of these shorter term trades if you have the time. Okay, if you have any questions, I'll answer them. If not, I'm going to probably close down for the day. Okay, let me take a quick look. All right, no, I don't see anything. So look, I'm glad everybody was able to attend today. Thanks for being here and have a great rest of the week. Thank you.